Thank you for joining this GSA webinar, The Road to Recovery from COVID-19. I'm Jody Shelton, the CEO of GSA, and it's our goal with these series of webinars to bring our members a variety of perspectives from the experts to provide the most comprehensive business information for the semiconductor industry, and until we can meet again. Today we have one of my favorite industry analysts, Handel Jones, founder, chairman, and CEO of International Business Strategy. Handel has a very deep and broad understanding of technology trends in markets and geographies. Many of us specifically depend upon his insights for a better understanding of China. And he will discuss today the road to recovery from COVID-19 based on his data gathered through his research. Handel will look at how different geographies, technology segments, and semiconductor industry are impacted and the trajectory to recovery. Today's webinar should run about an hour with both presentation and Q&A. If you have questions during the presentation, you can submit it by clicking the Q&A icon at the bottom of your screen. And Handel has said that he's going to take questions after each slide because it has a lot of data and information on each slide, so you can be submitting your questions as you have them. And I think that that's it with instructions. So with that, Handel, thank you, and we're looking forward to hear what you have to say.
Thank you. Can you hear me? Hello?
Yes, we can. Everybody else is on mute, Handel, but okay. I think that we can all hear you.
Okay, well, it's my pleasure to be giving information to you. And again, good morning, good evening, or whatever time of the day it is. I'd like to go to slide 3 and basically tell you what we see from a global perspective. And then basically in terms of, we'll dig it down into what we see happening in the electronics industry. We're going to talk about smartphones, but the bottom line is what's going to do to the semiconductor industry and where do we see things going and what the future will hold, and also where we see some of the turning points. So on slide 3, what we're showing is the total confirmed cases as of this morning was 1.29 million. As of this afternoon, it's actually 1.33 million. So it's jumped significantly. The highest quantity right now is in the US. We're showing 339,000. Spain is the second highest. But you see at the bottom of this short table that we have, China, 82.7 thousand. So in our opinion, China, South Korea, Taiwan, and potentially Singapore have it under control. And that has involved some very, very tight restrictions on people, tight restrictions in terms of interactions between people. But China, with 1.3 or 1.4 billion people, is getting back to business. And the supply chains are getting built, getting rebuilt. But of course, the big issue right now is that of the demand. So we'll talk a little bit about that in a little while. But the thing that I also want to stress is that this is a short-term phenomenon. And whether it's Q2, Q3, or Q1, Q2, Q3, 2020, 2021 should be a growth year. And our estimate is that the semiconductor industry is going to be $1 trillion, whether it's going to be 2030, 2031, 2032. And basically the perspective is that in 2019, it was $400 billion. So we have a 2.5x growth in the next 10, 12, 13 years. So a key part of all of this is how to survive the short-term problems, and they will be very serious. I don't want to underestimate how difficult it will be, but they're going to be very serious in the next couple of months. But of course, as I said, the recovery will occur, and the smart companies will find ways to increase market share, strengthen their positions during this time frame. We also expect to see some acceleration of many of the trends that have been occurring. You know, we're tracking the activities in terms of artificial intelligence. Logistics is going to be a high growth area out of this. Medical monitoring, monitoring of people's temperature, pressure, blood pressure, blood sugar content. That's going to happen in real time in many countries in the future. And of course, 5G is going to be a key connectivity technology for that. And of course, you're also tie in with positioning of people, facial recognition, 3D facial recognition. So there will be a significant acceleration of technologies coming out of this. And one of the key questions that I think has to be addressed is which countries, which companies will actually be the pioneers in driving some of these new technologies, and where will there be the adoption of technologies, and where there will be the protection of existing structures. So if you look at some of the dynamics of COVID-19 on a global basis, where very strict steps have been taken at early stages, and again, you can define early stages as being relative, to stop it, the results have been positive. Where there's been the approach of saying, well, we have to protect privacy, we have to protect, people's privacy, etc. The response has not been as good. So we have to make decisions now regarding basically how much privacy is allowed versus the overall health, etc., of people and economies. Now, of course, we do expect a vaccine to come in, and maybe the time frame for the vaccine would be end of this year, maybe the beginning of next year, and hopefully that will be a solution. But basically, we do have significant challenges in front of us in terms of when and how we control it. So I don't know if there are any questions regarding that slide. If not, I'll go on to slide 4.
No questions yet, Handel.
Okay, so I'll go to slide 4. Slide 4 is our assessment of which countries are controlling COVID-19. And the high percentages are high level of control, and low percentages are basically not controlled. And what we've done is we've assigned timeframes. So if you look at China, we have 95% as of March 31st. You can argue maybe it was 98%. You can argue maybe 99%. But basically fairly well under control. And people are moving around, and factories are starting to run, and people are in place for the factories. So we do have basically China getting back to business. There are significant stimuli being applied to support buying of products. Smartphones would be one key area. But again, with 1.4 billion people or 1.3 billion people, and the first country to have serious, well, what is originated in China, basically, they've actually done a very good job of controlling it. US, we have right now maybe around 10%. And US actually did have early information because you could see what was happening in China. But right now, maybe 10%. April, maybe 15%, April 30th. In July, 65%. So it's a long time in terms of the US because of the lack of clear directions or basically activities in doing the steps needed to control it. Europe is actually maybe in a worse situation. Of course, Europe, we have to look at different countries. Maybe it's starting to go down in Italy, maybe it's starting to go down in Spain, maybe it's starting to go down in France. But basically, we're talking maybe July, end of July, still 50%. South Korea, maybe a 65% is on the low side. I think South Korea has done an excellent job in terms of control, maybe some issues. But again, basically the actions were swift, even though there was initial big outbreak in the church congregation. Taiwan, again, excellent. Japan, basically, so far, indecisive. So maybe tomorrow, maybe there's some steps will be taken. But if you take actions quickly, you can stop it quickly, but at a huge price for personal mobility, personal, what we call freedom. So again, you basically do the trade-offs between control, which is basically impacting health, but also impacting the economic outlook. So the faster you can resolve it, the faster you can block it, the faster you can fix the economic problems. So the concerns, of course, we have with the US is with a slow response to control, now with the actions being taken, what kind of unemployment are we going to get? Is it going to be 20%? Is it going to be 25%? Probably not 30, but certainly going to be significant. And we do think a number of companies will become insolvent. And again, as I mentioned at the beginning, we're going to see significant changes in the structures of businesses and the areas where there will be high growth and the areas where basically we have to change business models. So clearly restaurants, some of these kinds of places will take time to recover. So again, a lot of the habits that we're used to are going to change. Logistics is clearly going to be a huge, huge area. And of course, logistics over time will be replaced with robots, and people will be taken out of the supply chain issues over time. But again, that's a 5-10 year kind of transition. So any questions on that slide, or I'll go on to the next slide?
We do have one question.
Yeah.
How much do you trust China's numbers, and how well are we understanding the risk of second waves of infections?
Now, that's a very good question. I think China, in our opinion, did understate the numbers, but we have people that are on the ground in China, which includes being in Wuhan. So yeah, the numbers are probably understated. But again, I think that the recovery is effective. I mean, we were able to track people in terms of factories. We're able to track people now in terms of trains. The second wave is a very, very major concern. Of course, they've stopped basically incoming people from flights, and they're trying to do it on the borders right now. But, you know, we have very little information in terms of the second wave. China is doing quite a bit of monitoring. So it is a serious issue. You know, the approach of Holland is kind of interesting. Basically, the approach of Holland is they want to have people get infected and build the antiviruses, or build the antibodies rather. So that's the kind of one way of doing it. I don't think China's done that. But yeah, China probably has understated, probably Wuhan has understated. But again, you know, is it 150,000? You know, is it 200,000? I don't think so. But the US is 300,000. And again, how understated is the US? Probably not so much. But I think we have to give China credit for getting back to business. But yeah, the second wave is potentially a very serious issue in China, but also in other countries, including, you know, Asia, including countries in Asia and also the US. So thank you for the question. So I'll go to number 5 now. So the impact on global GDP is significant. You know, we're not global GDP experts, so we've done surveys in terms of what are the most likely scenarios. And part of the reason we do this, because there is a relationship between global GDP growth or global GDP decline and the semiconductor market. Semiconductor market is also impacted by specialty buying practices like notebooks, you know, in terms of for home use, smartphones, to a certain extent are disconnected. Automobiles are highly connected. So the pessimistic scenario is where we have a global decline of 2.5% compared to what is projected of a global growth of 3%. And again, as we look at the unfounding or the growth or the expansion of COVID-19, that 2.5% decline is probably optimistic. where we had pessimistic before, as we kind of keep on, peeling the onion, the situation keeps on getting worse. So China is stimulating internal consumption, but China is very heavily dependent on exports. And if you track the exports from the freight going out of ports like Shanghai, it's dropping quite fast. And of course, that freight is going to the US, going to Europe, and going to other countries. So how much can you stimulate in terms of local consumption in China? If you look at the smartphone market, they will buy 350, 370, maybe 400 million smartphones this year. Our latest assessment is the global smartphone market would be 1.3 billion. So if they buy 10% more, 20% more, it basically doesn't move the needle. For Chinese to buy more cars, automobiles, doesn't move the needle, but we still think the consumption or the volume of automobiles in China will be down 20% this year at least. So the EU is clearly in a major down phase. US, frankly, the stimuli that's being put in is good, but you've got to get people back to work. So if this thing lags until July, yes, we'll have essential industries working, but basically we'll still have very high unemployment. So that ties into the buying patterns for electronics and also for semiconductors. So I think from the US, from an Euro point of view, we have to be prepared for significant unemployment, which will result in reduction in buying power for things other than food, etc., which will then have a negative impact on the semiconductor industry, and that's the area that we're really focusing on in terms of trying to understand how big will the impact be. So any questions on slide 5?
None so far.
Okay. So slide 6 represents our projection for the semiconductor market by quarter in 2020. So we have the data for 2019, which basically showed a market of 400.9 billion. There's a perspective that 2019 was down 16.1% from 2018. In 2019, the major decline was really for the DRAM and NAND, and most of the impact of the decline was really because of lower gigabyte prices. But in terms of 2020, we do have a much broader base decline. We do now project DRAM market to be down from 2019, the NAND market to be down, the processor market to be down, analog to be down, even chipsets for smartphones to be down, even though we have basically the potential for higher value because of 5G. So in Q1, basically the number we have is 98.1. I think most semiconductor companies actually perform quite well in Q1. And we've actually seen very few guidance or early numbers or early guidance in terms of what the impact was. So if we look at 2019, 98.9, Q1 our numbers is 98.1. In Q2 though, we basically are going down quarter to quarter 13%. We're going down to 85.3 billion. And then we have a continuing decline in Q3, another decline of 4.6%. And then we're actually showing a relatively sharp return to growth in Q4 2020. But again, if you look at that, it's still about 7% below Q4 2019, and the total decline is about 10%. So when we first did this chart, we basically had realistic as a higher percentage than what we now show as pessimistic. Today, pessimistic has become the realistic, and frankly, we're going to be redoing this table again in the next 2 or 3 weeks, where we'll take another look at it. And of course, by that time, we'll have some guidance from some of the companies, from some of the semiconductor companies. But the real approach that we use, the main approach that we use, is we look at the consumption of semiconductors by end market category. So if you look at the end market categories, smartphone market consumes approximately 40% of the total semiconductors consumed globally. Computer is about 24%, consumer about 15%, automotive about 9%, wireline communications about 7%, and then others about 5%. So the number one driver for the decline and the recovery of the semiconductor market is the smartphone market. So we do think there will be some recovery of the smartphone market, but basically we are reducing our numbers from the original number of 1.4 billion down to 1.3 billion. And then there's a perspective that in 2018, the volume was actually 1.6 billion. But of course, the semiconductor content in smartphones has gone up. So as I said, we are basically projecting a very tough Q2 and also a very tough Q3. But if you look at Q2 going down 13% from Q1, and then Q3 going down another 4.6%, that's a pretty drastic change, especially when you look at, I said, the market was down in 2019, 16% versus 2018. So any questions on slide 6?
Yes, we actually have several questions. I'll start with the first one. There's a widespread belief that the U.S. and China will decouple in terms of manufacturing supply chain, and the decoupling will accelerate post-COVID-19. How will semiconductor supply chain change post-COVID-19? And if the decoupling does happen, how will that change your projections of semiconductor reaching 1 trillion in 2030 to 2031?
Well, if the decoupling becomes worse than it is now, I mean, we're obviously tracking the entity list very closely. We're also tracking very closely what could be happening with TSMC in terms of supplying chips into China. If there are any if there's a drastic change in some of the trade issues where we do see, increased decoupling, we'll have to reduce our numbers. In terms of the 2030, 2031, we still have positive growth in terms of the semiconductor market long term, but again, there probably will be a postponement of the $1 trillion. I mean, we really have already a significant decoupling between the US and China in 5G. I mean, China, basically, we have, 130,000 base stations at the end of last year, probably 700,000 5G base stations at the end of this year. Basically, we have, total of maybe 170 million 5G smartphones into China this year. US is doing millimeter wave. I mean, millimeter wave is a very different technology. I think the merger between T-Mobile and Sprint is really good for the US 5G industry. But yeah, I think if there's further decoupling, I think this is a very serious issue in terms of recovery of the US, but also I think it's going to have a significant negative impact on China because of the need for China to continue to export. But as I said, a key factor in all of this is going to be what actions are taken against TSMC to prevent the shipping of 5 nanometers, 3 nanometers, even 7 nanometers into China.
Great, thank you for that. A couple more questions. Given lag effects in the semiconductor industry, why wouldn't Q3 reflect a larger sequential decline than Q2?
The reason that we have right now is as I mentioned, the smartphone market is the key driver. So we do expect to see relatively strong growth of smartphones in Q3. And of course, 5G smartphones will ramp in Q3. But so that's the rationale that we have for the lower decline in Q3. But again, it goes down to 81.4 billion, which is 20% lower than Q3 2020. Sorry, Q3 2019. So that's a big drop, 20% down year on year.
Thank you. And one more as well. Excluding memory, would you see semiconductor forecast to decline in I believe it's supposed to be 2021 for the question as well?
We're expecting 2021 to be a recovery for non-memory as well as memory. And again, we do think that there will be returning to some normalcy in terms of 2021. Now, the thing that we also didn't mention, in what we've talked about so far, 2020 is an election year in the US. And if the economy is really bad in Q4 of 2020, that's going to be very negative for Trump. And of course, he's going to do everything he can to be reelected, which means that he's going to try and stimulate the economy as much as possible. So we do expect right now that in Q4 2020, there will be recovery of global GDP growth, etc., which will then carry into 2021. So we think that in 2021, basically, we will have positive GDP growth, we'll have positive semiconductor market growth, and of course, by early 2021, we also expect to see vaccines coming in that will basically help address the issues.
Great, thank you. No more questions.
Okay, so slide 7 is basically a continuation of what we just covered. So I think I'll skip on to the next slide, which is slide 8. So slide 8 shows the original numbers we had for the smartphone market this year, where we're actually showing a decline of 1.4 billion to 1.4 billion from 1.5 billion. But basically, if you look at the 5G volumes, we have 199 million. And then if you look out through 2030, basically we're talking about 2.6 billion. And the 5G smartphones, about 2 billion. So we've changed our numbers right now down to 1.3 billion. Part of the reason was that the smartphone volumes in China slowed significantly in Q1, but we are seeing now a recovery in Q2, but the recovery in Q2 is being skewed towards the 5G smartphones. You can buy a 5G smartphone with the Snapdragon 765 from Xiaomi for under 2,000 RMB, and it's got pretty good camera capabilities. And it's a fairly well-functioning 5G smartphone. The one problem you do have in China, as anybody who lives there, as you know, is that the infrastructure is not established yet. So it's still a bit tricky to use 5G smartphones effectively. But we think that there will be higher growth in 5G smartphones than originally we projected. But again, the infrastructure for the 5G smartphones has only been established in China and South Korea. So I think in South Korea, we had about 94,000 5G base stations at the end of last year. And I think by the end of this year, I think we're going to have 250,000, 300,000. So South Korea is on a good growth path for 5G. But as you know, the population is fairly small compared to China. So the key driver in all of this is basically going to be China. There is also the issue in terms of what Apple will do. If you do a millimeter wave phone, and it's only millimeter wave, basically you can only use it, very limited use. If you do millimeter wave and sub-6, of course you can use it globally. But frankly, the only real use in 2020 will be in the US. Sorry, in China. We are seeing the increased inclusion of time of flight, and time of flight will be a huge growth area. for support of augmented reality. And of course, we're seeing continued increase in the camera functionality. The P40 of Huawei, I think, has 5 back-facing cameras. So the smartphone market, basically, and again, on slide 9, let's go to slide 9. Basically, we're explaining a little bit more in terms of what's happening in the smartphone market in 2020. And of course, we do expect there will be a recovery in volume in 2021. So the upside potential now for 5G can be 220 million to 230 million in 2020. And as I said, smartphones represent 40% of the global consumption of semiconductors. So the smartphone market is not going to be quite as dependent on global GDP recovery as the automobiles and other areas. So you saw in Q1 a sharp demand for notebook computers. I think you're going to see basically increased demand for smartphones starting in Q2, Q3, as the new phones come out. And of course, they will have increased camera functionality and basically improvement in terms of support of online gaming and other streaming video content. We do expect coming in future in 2021, 2022, augmented reality to become increasingly adopted. And of course, gaming will be one of the initial drivers for that. But again, that's going to be a stimulus in terms of the growth of smartphones, which is a positive characteristic for the semiconductor industry. The other factor that's coming in, which is also very positive for the semiconductor industry, is that as 5G comes in, RF connectivity technology and capabilities becomes a lot more complex, but with providing of high value for the semiconductor, higher value for the semiconductor vendors than 4G. Also, the image sensor volumes, by the way, will continue to grow this year. And of course, that's very good for Sony, also very good for Samsung. And then the time of flight, as I said, which involve VCSELs, will have strong growth this year. So the smartphone market is one of the key drivers for the recovery of the semiconductor market. So that's why right now we're showing positive growth in Q4. So any questions on slide 8 or slide 9?
No questions so far.
Okay. So in slide 10, what are we seeing in some of the smartphones? So we're seeing basically the migration to 5 nanometers. The company potentially with the highest volume in 5 nanometers is HiSilicon, and then Apple and Qualcomm just announced that they have their new 5G modems in 5 nanometers. So the volume of the revenue that we originally had for the 5 nanometers this year was $4.1 billion. And for next year, $8.1 billion is probably on the high side by maybe 10 to 20%. But for 5 nanometers is a key technology for the smartphones in terms of higher transistor density, higher performance, but not necessarily lower transistor costs. Based on our initial models, we actually see slightly higher transistor costs based on TSMC wafer prices and the chip sizes that we know, and the transistor count of these chip sizes than we see in 7. 7 nanometers, there has been shortages. So I think you will see the easing of those shortages as the volume of 5 ramps up. But again, where we do show, I think, revenue of about $12 billion for the 7 nanometers this year, that's probably again high by around 10%. 28 excess capacity, 45 excess capacity. But in 2022 or 2023, there'll be shortages of 28, and there'll be shortages of 45. And there'll also be shortages of 12, 14, 16 nanometers. And a key factor in those shortages will be that of image sensors. We're showing image sensor volume growing significantly between 2020 and 2027, where we have in 2027 about 21 billion units. And if you look at the chip sizes of image sensors, that comes out to be about 1 million wafers a month. So that's in Sony, that's in Samsung and some other companies. But the image sensors also have the ISP, which is directly attached to the image sensors. So the ISP chip size is the same as the image sensors. And of course, Sony right now is at 40 nanometers. Samsung is starting 16, but Sony will migrate to 28, where they'll do FD-SOI, is unclear. Samsung is already doing designs in 14. So the buildup of the volumes of the image sensors and the ISP will result in significant shortages in the 28 and potentially 45 nanometers, and that's going to occur in the time frame of 2023. So we are seeing, as I said, the impact. So if you look at the foundry market, at the advanced technology nodes, like 5 nanometers, in 2020, about 95% of the chips are for smartphones. So the GPUs, the processors, lag by 1 year or 2 years. But of course, the volumes are significantly lower than in terms of the smartphones. The one thing that you are seeing in smartphones is that the unit volumes are not going up. Chip sizes are not going up. So as you do go from the 14 to 7, as you go from 7 to 5, wafer volumes don't increase significantly. So you can potentially have some volatility in terms of the wafer demand by technology node. So if you look at TSMC 10, basically very low volume wafers now, but that's the same wafer fab as the 7 nanometers and also 6. And then of course the 5 and the 3 will be in a different wafer fab. So I kind of covered a couple of points in terms of that slide. But if you look at the volumes of smartphones, you've got Samsung at about around 270, 280, 290. Apple around 200. Huawei last year 240. This year probably under 200. Then you've got Xiaomi, but 120, 130. You've got Oppo, Vivo, each around 120, 110, 120. Everyone else is 50 million or under. So the smartphone market is concentrated within a relatively small number of high volume customers that drive the new technologies, and the others consume a lot less wafers and also tend to be in the lagging feature dimensions. So any questions or comments?
No, go ahead.
Okay. So now I'm going to switch a little bit more, talk a bit more about China, and then in terms of how China impacts the global economic environment and so on, and semiconductor industry specifically. So China in 2019 and 2020 will consume about 50% of the total global semiconductor consumption. So when you look inside China, about 50%, and this is shown in slide 18, is internal consumption, and about 50% is based on exports. Now, with what's happening with COVID-19, that probably will shift to maybe 55% internal consumption, maybe even 60% internal consumption, and 40 to 45% exports. So even if China basically, gets back into a growth mode in the Q2, Q3 timeframe, an export lag, there will still be some overcapacity in terms of the supply chains in China. So you see that in terms of Foxconn, Honai, you see it in terms of the whole range of companies that basically support them. There's also an interesting statistic that Huawei just came out with, where they said, I think they purchased about 17.8 billion worth of software and hardware from US companies in 2020. 2019 compared to 11 billion in 2018. And of course, if Huawei is put under a very strict export control, of course, that's going to impact the sales of a number of US companies, but that will draw, in our opinion, a fairly strong response from China. And I think part of the response could be to then limit the shipments of products of US companies into China, and specifically potentially for the smartphone market, but also for automotive and other markets. So if we go to slide 12, this kind of goes into a little bit more detail in terms of what I'm talking about. But where we do, as I said, show that China, they claim they're close to 80% production capacity now. We actually think that's a bit of an exaggeration. It's more like April 30th. But again, the recovery has been strong. But the issue with China now is going to be the export market, supply chains for basically components that are coming from small companies that potentially have liquidity issues. I think some larger companies will buy some of those companies, but they're going to have a major challenge in terms of employment, basically keeping the economic growth positive in 2020. And I think 2021, I think there will be some kind of let up in terms of the pressures. The other issue that I think is important in China is the strong emphasis on artificial intelligence. So I think you'll see many of the issues related to manufacturing with people being replaced with robots. And again, that's a 5 to 10-year time frame. Logistics, of course, is going to change dramatically to become automated, robots, etc. I think you'll see acceleration of autonomous delivery, autonomous vehicles, etc. And I think those technologies actually will result in China accelerating growth in a number of areas. But of course, it's going to result in basically lack of employment for many people. So it's going to be positive in terms of technology, negative in terms of employment. So I think China is going to go through some major challenges in the next few years, but we can be sure that it will accelerate development of new technologies. 5G is going to be enhanced. There are billions of dollars already being committed to 6G, even though the rollout is being planned for the late 2020s, early 2030s. I think you're going to see strong growth for electric vehicles. There's been a pause, but I think you're going to see acceleration of that because we will create new industry, will create new technologies. Battery capacity will be expanded significantly. So I think this is going to be an acceleration. COVID-19 is going to be an acceleration of investments, technologies, and strengthening supply chains in China. So how the US and basically Europe respond to that, how other countries respond to that, how will Korea respond to that? So I think we've got some major issues now in terms of the changes in the center of gravities in technologies that are occurring because of COVID-19, and with the relatively fast recovery in China and the slow recovery in many countries, I think that's going to accelerate the changing of, again, the center of gravity, where China will clearly accelerate, as I said, its investments and rate of technology enhancements. Any questions on 11 and 12?
No new questions.
Okay. So when we look at 13, US perspective, we do see fairly strong growth right now in data centers, and there is an explosion in the amount of data being created. How long that will continue basically is some issues. Today, we're relatively positive because the internet infrastructure has not been dramatically affected on the downside, but affected significantly the upside. So the expansion and capex of Amazon, of Microsoft, of Google, of Facebook, all of these are good for the industry, for the semiconductor industry. So we do see right now strong demand in terms of the DRAMs, the high-end ones, also the high-end SSDs. So Samsung should be benefiting from that market segment right now. There is growth in demand for processors. The x86 is still critical. Basically, we think there could be some growth in demand for the GPUs of NVIDIA, and then also potentially AMD. So again, that's a segment which is probably 10% of the semiconductor market on a global basis, but in the US it's probably about 20% or 25%. So that right now is looking good. But if the economy stays relatively stable and we don't go into a depression, that's basically a positive for the semiconductor industry in terms of 2020. We do expect to see significant inflation. Food prices are going to go up significantly. That combined with high unemployment is going to reduce buying power. So where will that buying power hit? So automotive is clearly going to be hit very badly. We do expect purchases to go down 20% or more. So factories are being closed already because there's no demand. And that's also going to create significant unemployment. And of course, as I said, automotive right now is about 10% of global semiconductor consumption, but the companies that are participating in automotive, where they have 30 or 40% of their revenue from automotive, which could be either in the US, Europe, or even China, they're going to be hit very badly. So you're going to see significant differences between the various application segments and the various products in terms of consumption of semiconductors. So where will there be some growth in automotive? Well, we think that there will be growth in electric vehicles, hybrid vehicles, but not as high as we projected before. Tesla clearly could have some significant problems because the electric vehicle is not highly regarded outside of California in the US. And there will be growth in China, but of course, there are a large number of electric vehicles in China already, and I think volume last year was about 1.6 million. But in overall basis, power semiconductors will have growth, and the highest growth will be for silicon carbide, because with silicon carbide MOSFETs, both for the inverter motor control and also for the onboard charging, you get lower battery cost. So even though the chip cost is higher, you actually get lower battery cost and a longer range. So the key issues in the US is how rapidly will there be a response in terms of the slowing of the expansiveness of the virus, which to date is happening quite slowly, and we're fairly negative in terms of potentially not until the end of July. And then the impact on the economy and the unemployment. So at its best, the US is highly innovative and can respond very rapidly. But there has to be a focus and strong leadership. So right now, I said we don't see that leadership in the US. We saw very strong leadership in China, and you can criticize that leadership in terms of privacy of people. We think we saw very good leadership in South Korea. We saw very strong leadership in Taiwan. And of course, in Japan, very middle leadership. So I think, again, it's a very much of a product, end market, geographic issues regarding the semiconductor industry, and of course, the electronics industry. So any questions on 13?
We do have a couple questions. First one is, how do you see the US-China relationship post-COVID-19?
You know, we in Washington, we have two very distinct, very strong biases. You know, one bias claims China is the enemy. And again, in my opinion, with very little real information. The other one says, okay, we really should be trading with China because win-win is good for both countries. And that's the camp I'm in. I think the mood in Washington until about 2 weeks ago was to increase restrictions on China. But Trump had the call with Xi Jinping. And if you notice, Trump basically changed his kind of outlook on China a little bit. So I'm hoping that there will be no more restrictions or no additional restrictions. I'm hoping there could be more collaboration, but the probability of that occurring is 30–40%. The probability of it getting worse is probably 60–70%. And post-COVID, I think that will cause basically more fragmentation and less cooperation. And I think that's going to be bad for both countries. So frankly, we think it's going to more likely to become worse than better.
Great, thank you. And second question is, could you elaborate more on supply chain challenges in the US? Is it regarding the semiconductor supply chain or something else? And how would you recommend improving the problem?
Well, the semiconductor supply chain in the US, if you look at who's manufacturing in the US, obviously Intel has significant volume capacity. And from what we can tell, there has not been any significant hit to Intel from the supply chain of wafers or chemicals, etc., to date. Global Foundries in Malta and Fishkill have continued to operate, and there's not been any significant disruption to date. So, frankly, for Q2, from the wafer supply side, unless we have some drastic changes in terms of the expansion or more restrictions in terms of related to the virus, we think that the semiconductor manufacturing capabilities in the US will not be dramatically affected. Now, again, if you look at Intel, they have wafer fab capacity in Israel, they have wafer fab capacity in Ireland. Dalian is none, but again, Intel is spread. Global Foundries, it is basically based on technology. The FinFETs are in Malta. SOI is increasingly in Singapore, and the automotive and some of the FDSOI and so on is in Dresden. So I don't think the semiconductor supply chain issues are going to be dramatically impacted in Q2 from a supply side. The issue though is going to be demand. What's going to be demand for personal computers? What's going to be the demand for the products that utilize the wafer fab facilities of these companies? So that's the major concern we have for Q2 or Q3.
Great, thank you. No further questions.
Okay, so slide 14.
And Handel, I will chime in here that we have about 5 more minutes.
Okay, I'll go fast for the last 2 slides. Okay, so the decline in the semiconductor market by 10% or more this year will result in a decline in the foundry market by probably roughly the same amount. There could be some lag in terms of when that occurs. The capex that was being projected based on the bottom-up analysis for the wafer fab capacity and so on in the industry this year was projected at 90 billion. Based on COVID-19, I think we should reduce that to about 70 billion. So we are going to have a significant hit in terms of capex, and that will apply to DRAM, that'll apply to NAND, that'll apply to the IDMs and also foundry. So it's not going to basically go to zero. I don't know, I don't think any quarter will go to zero, but capex will, for the industry, will decline. And long term, again, we do show, if you look at the $1 trillion in future, if you look at the 90 billion required to support 400 billion, to support $1 trillion, you need $250 billion. So long-term prospects for ASML, for for applied, for Lam, and so on is very good. So the last slide, 15, basically COVID-19 can be stopped, but you need very, very strong actions to stop it. And basically we're seeing that occurring in some countries, but in other countries, the US and Europe, it hasn't happened. The semiconductor market basically will decline this year, 10%, 12%. So again, we're going to update this. We'll have updated numbers in 3 to 4 weeks. And every time we kind of look at the numbers, they're going down. We haven't seen the indicators that would force us to turn them up. So we will have, various industries that will be more impacted than others. Smartphones is the key indicator for growth, the upturn in the growth of the industry. So I recommend that you track the smartphone market very closely. Data center is also a good indicator for DRAM, for NAND, etc. Smartphone is also a good indicator for DRAM. LPDDR5, by the way, is going to be short supply. And then, of course, if automotive turns up, that means that we've really turned the corner. But that's probably going to be in middle of 2021, or at the earliest, early 2021. So I'll stop there. If there are any questions or comments, I'll be happy to take them.
We don't currently have any questions right now, so I'll leave it to Jody.
Okay, Handel, thank you very much. That was very insightful and a lot of numbers to study and so forth. So thank you to everyone for joining. We do have a webinar on Wednesday with Dan Niles. That's our normal quarterly update from him, but I think it'll be particularly interesting at this time. And then we're currently working on a couple others that will keep everybody posted. So everybody stay safe out there. And Handel, thank you. Handel, we're gonna be able to share these slides with everyone?
Of course. And then, as I said, we're going to be updating some of the numbers in about 3 to 4 weeks.
Okay. Well, we'll send this one and then we'll look out for your updated numbers. So thank you, everyone, and be on the lookout for the presentation. And we hope to speak to you soon.